Hey traders, Raghee here. Let's get a quick audio and video check in. All right, should be good to go. Happy Thursday, everybody. Hope everyone is doing well this morning. We are kicking off the day before the non-farm payroll session with, we have ADP this morning as well as the unemployment claims. And unemployment claims, by the way, if you're wondering, okay, Rog, do we really care about ADP? Normally, that's not something we're that concerned about. And really, I'm usually not, other than we already have jobs on the mind, right? Everyone's got jobs on the brain, especially since the Federal Reserve has put that in the spotlight. And anytime we have metrics that show the labor market is slowing, that there's weakness, it's going to increase the probability of a rate cut in September. But I'll tell you this, and I was thinking about that this morning, this rate cut and the data that we've got coming up tomorrow. Let's say non-farm payroll is a great big, awesome, better than forecast number. Does that undo the 97.4% probability of a rate cut in 13 days? Probably not. It might drop it off this very high reading, but it's likely not going to suddenly put the 2.6% expectation into the highly probable side of expectations. Probably not at all. What will likely happen is traders will go about expecting the rate cut in September, but rate cuts to come, for example, October 29 or even December 10, those become less likely. So maybe we get 2 rate cuts this year. Maybe we'll only get 1 rate cut this year. This will continue to be all right, where are we with JOLTS? Where are we with unemployment claims? Where are we with non-farm payroll? And we'll get that in October. We'll get one in November. We'll get one in December. And so rather than presuming there are a whole bunch of rate cuts still to come, a total of 3 meetings left, it does look like the September 17th is a done deal. You can stick a fork in it. It doesn't mean that October 29 and December 10 are necessarily rate cut meetings. And they're going to say they're live meetings, they're data dependent. And probably for October and December that is true. But the September 17th is pretty much a done deal. This is the second time we've been, I think, right up at nearly 100% for expectations. We do hear from Williams today at 12:05 p.m. Eastern. And we do have some ISM services PMI, which probably really, frankly, doesn't matter. So we've already got the employment change from ADP, the unemployment claims. And the unemployment claims are what nudged this expectation higher than even it was yesterday, where it was above 90%. So we're heading towards rate cuts. But does that save everything? It sure doesn't hurt. It's tough to be a bear when we're thinking about the scope of a quarter or multiple quarters, when we're still in a dovish or rate cutting monetary policy cycle, right? So I'm not talking about day to day. I'm not even talking about hour to hour or maybe not even week to week. But when we step out a little further, it's tough to be bearish. And, here's another reason where it's tough to be bearish. And, this is where I'll mention that there's a lot of talk about things like market internals and things like that. Gang, I don't care at all about market internals. I don't pay attention to them. And why is that? I know I sound like a heretic every time I say that. Because if you want to know what's going on under the hood of the market, look at the sectors that are weighted within it. Look at the stocks that are weighted within the sectors. And remember that I don't recall a single market internal, tick, trend, put call ratio, advanced decliners, none of them actually weigh the market in the way that the stocks are weighted in the indices. None of them. So what does that mean? Well, let's take a really easy example, because this is where you can get a lot of terrible reads about participation and things like that, because people are looking at these market internals, which are just categorically wrong. They're reflecting some reality, but they're not reflecting this reality. This is the S&P 500. These are the top 15 stocks in the S&P 500. So if I want to know what the S&P 500 is doing, the top 15 stocks are a great place to start. But does anyone think here that Exxon is as influential on the S&P as NVIDIA or Microsoft or Apple? How about Eli Lilly or Visa versus Meta, right? So until we're looking at something from the perspective of the weighting, this is where, if you want to know, are things bearish or not, this is where I'll take us right back to the Koifin, and we'll look at, this is all the US sectors, and this is all the US industry. So let's just clean this up a little bit to look at just the US sectors, which for the most part are going to reflect those main sectors that are weighted within the indices, S&P, Dow, NASDAQ. All but one, and it's not even the one that's weighted in any of them, all but one are still positive. That's utilities down there. There's not a lot of weight in this defensive sector of utilities in the broader average. I don't think there's any. Maybe in the S&P 500 if we get further down that list of 500 stocks, but for the most part, everything is positive. This is participation, gang. If we look over the course of the last 1 month, now if you want to look at participation over the last 5 days, it might look a little bit different. So this is where, I see people listen to analysis or even get on fights in social media about their analysis, because the one thing that's usually missing from the analysis is time frame and time horizon. Meaning, unless I tell you I'm looking at a daily chart for the next 2 to 3 weeks or the next 2 to 3 months, my analysis of being bullish may not make sense if you're looking at a 5-minute chart and there's a little bit of heaviness. So usually the confusion that comes from analysis comes from not communicating the time frame, which dictates the time horizon. So when you look at these 3 charts on the screen right here, the 5-minute is for day trading. The 1 hour is for short-term swing trading, meaning overnight positions, maybe 1 to 3, maybe 5 days. And the daily is for long-term swing trades, which are maybe a handful of days to maybe a handful of weeks. So again, that perspective matters. So if I'm looking at something weak right now on a 5-minute, that might have nothing to do with the overall strength or weakness on a daily or even hourly time frame. So we always want to remember each slice of psychology has a job, and I do not use multiple time frame confirmation. Am I going to be bearish on the daily because the 5-minute is down? Or am I going to be bullish on the 5-minute because the daily is up? How about we look at the 5-minute for the 5-minute slices of psychology that it is, and we look at the daily for the session by session psychology? Because the mood of the market, oh my gosh, you look at a 5-minute chart, the mood of the market can shift every 10, 15, 20 minutes, right? It's much more, it's going to cycle through all those human emotions a whole lot quicker than, relatively speaking, that stoic daily candle, which is giving us 1 candle per day. Remember, we're getting 12 5-minute candles per hour. A lot can change in all that. All right, so let's take a look at what we've got here this morning. Aside from the hot zones, mentioned unemployment claims, expectations are for those cuts on the 17th. Pre-market, the indices, and I mean, when I say hovering, I mean just barely hovering above the previous session close. I mean, above the PSC for our intraday is just bullish sentiment. It's a line in the sand. It's, if we're above it, there's a little bit more bullishness as if we're below it. Trends obviously will eclipse any kind of read like that. But if we're in a non-trending environment, which crude, bonds, silver, gold, Russell, Dow, S&P, NAS, none of them have a trend at the moment. Some of them were a little heavy, but now they're neutral. So in a neutral environment, being above or below that previous session close is valuable information, because now I can at least understand, well, there's going to be a little bit of support, say at 64.60 and a half on the S&P, or when it comes to the Dow, neutral environment, and I'll expect a little bit more bullishness since price is hovering above 45,276. And these are all very simple things. This doesn't even need to be an indicator, although in the way that we love to take anything that we could do manual and either give it a simple, easy to read label or a simple, easy to see line. I love to take things that normally I would have to go look for and just put it on the screen. That's our dashboard. But if you're looking at that PSC, previous session close, it's yesterday or the previous session's cash close. All right, so Bell's going to ring in about, well, now. So I hope my speaker isn't too loud. And it is not. Okay. So, and they're off. So first things first, as we go into today, the biggest data release we have is yet to come. And that's tomorrow's non-farm payroll. Much like we've been saying, price is not sinking rapidly. It's just not accelerating to the upside either. But one of the things that we're looking for is our setups that we might be able to take through NFP. Probably not many of those that are going to catch my eye because NFP can be such a pre-market massive sentiment shift. But largely, it's a whole lot easier to be bullish than it is to be bearish right now, if my time horizon's longer. But the best swing window that we have yet to come is going to be tomorrow morning. So we can manage what we've got now. We have one position open. That's CVX. We have a small position. Some of you got the aggro. Some of you got aggro and moderate. I did send out my trade alert recap. Am I going to be aware of any Dow weakness? Yes. Am I going to be aware of any crude oil weakness? Absolutely. Am I going to be aware of any energy, XLE, or even XOP weakness? Absolutely. Those are all things to keep an eye on. But I'm just making a bet on an outperforming sector and an outperforming stock in that sector, right? So nothing to really even concern ourselves with CVX until about 10 o'clock. So one of the things that I like to remind traders, I haven't wanted to actively trade into, especially the month of August. I don't want to actively trade into the close of the end of August, but we finally have a swing open, and I'm looking for a whole lot more after non-farm payroll, those dips that I want to buy. There were a few things that I was looking at last Friday, and it probably wouldn't have hurt to be a little bit more aggressive. You remember there was 3 things I mentioned in the free video, also in the room: Home Depot, Lowe's, TJ Maxx. Home Depot and Lowe's are doing okay. TJ Maxx is really something I need to keep an eye on. And those are relative outperformers and relative outperforming sectors. The same process we're going to use for day trading here after we get the first 5 minutes of the morning out of the way. So think about the clock right now, right? The clock is an indicator for day traders. From 9:30 to 9:35 Eastern, we're going to get that initial burst of volume and action at the bell. Then from 9:30 to 9:40, 9:30 to 9:45, that volume starting to come in, ranges are normalizing, and you get that first 15-minute range. We're halfway through the opening range or the clearing range. We're halfway through it. That's what other read traders will take. Hey, what's the high-low? What's the general direction in the first 15 minutes? By 10 o'clock, we have our opening range complete. Sometimes we have a hot zone at the top of the hour. From 10 to 10:20, we have our post-opening range for day trading, another window, if you will. I mean, the window opens by 9:35, 9:40. I don't want to do anything any sooner than 9:35 because, again, we want that volume to come in. We want those candles that can be very erratic at the open to get out of the way. And in the meantime, a lot of it's sometimes really easy to get distracted, especially when you have open swings by, oh my gosh, Rog, the position's up or the position's down. So I send out to the traders a reminder about how I manage the morning. And sometimes a trade or a leg of a trade, so the aggro of a trade, could be close to its stop loss. And between 9:30 and 9:35, I'm not going to worry about it. In fact, I won't even worry about it until 9:45. Then I'll get a read on what it is that symbol is doing in relation to what I paid for it. Normally, I'm going to wait till 10:05 to cut something. That's usually going to be get the clearing range out of the way. Let's see a truer direction out of the market, and then I'll decide what's next, right? But we're still in a very difficult environment. I mean, yes, the volume's coming back out of August, but this is still a really difficult environment, gang, because what Powell did in August with the Jackson Hole Symposium was just say, now we're focused on jobs. We're done with inflation. We're over that. Now we're focused on jobs. And because of that, every single employment metric that comes out becomes another reason to presume the Fed could cut or may not cut. And then in the backdrop of all this, we've got all the geopolitics still going on. And whether it's the merry-go-round of, oh, today the headlines about Russia, Ukraine. Oh, today the headlines about tariffs. All that stuff just keeps spinning around. So this has not been a simple, straightforward kind of year. I think a lot of us know this. And it's just persisting into fall. Can we trade it? Absolutely. We're just going to have to be more patient. And I'm very optimistic because we're not lacking that clarity on the long side, right? We're not lacking it. We had a strange beginning to the year in terms of beginning to the month, not beginning to the year. We had a strange beginning to the month. We had that sell-off from over the weekend. That was also, I believe, tariff related, if I recall. So there's always something that seems to be pushing the market sometimes past normal volatility. That's exactly what we had on Tuesday, the first trading day of the week. Sadly, Tuesday was probably, again, hindsight's 2020, but the levels don't lie. Tuesday was probably the best buying opportunity of the week, right? And in a parallel universe, I imagine that, I was more willing to take on the uncertainty of that Tuesday massive session. And if you think about it, were we ever bearish? That's probably the most important thing. Were we ever bearish, say within the S&P? No, or even the Dow? No, because they persisted in printing those green top tier candles. And while it's still bullish chop, it's still bullish, right? And those are things that if we're following headlines or momentum or panicking one way or the other, it's tough to get the clarity on. All right, so first 5 minutes is done. Volume comes in, spreads start to normalize. Now we can get to work. And what am I going to look for? All right, so it's 9:36. And what I'm going to be looking for are our 3 core setups. Okay? It's no different than when we shift over to swing trading. Our 3 core setups. Is anything near the hourly price movement range? Is price near a Darvis? Has that formed? And do we have a trend? Therefore, I can look at the wave. That's it. So let's say, for example, I'm looking at the S&P. If we're above the previous session close, which we are, I prefer to be long calls. If we're below the previous session close, I would prefer to be long puts. We're above the previous session close. So what I'd like to see is a Darvis, maybe a trend, or an hourly price movement range. And I've got none of those. And that's probably one of the most difficult things for traders to accept when there are some pretty big moves happening and it seems that there's nothing to do. Nothing to do is actually a discipline most traders don't have. So let's do the same thing with the NASDAQ here. We're above the previous session close. I'm nowhere near the hourly price movement range. I don't have a wave because I don't have a trend. And there's no Darvis. That's okay. That's okay. Around 9:40, what I'll do, and I'll just kind of get out ahead of it just a little bit, is I'll look at any trends, especially since we're above the previous session close. I'd rather look at uptrends. Do we have any uptrends? It looks like XLC, XLY. So those, by the way, are the 2 stronger sectors in the NASDAQ to begin with. It's not XLK, it's not SMH, technology and semiconductors, it's communications and consumer discretionary. Any other trends? Yep, KRE is up there. Wow, look at XLP and XLU go today. Wow, not on my bingo card, but we have the 2 defensive sectors that are also very strong. Now, these 2 are defensives, which is to say that they'll do well. Yeah, they can do well in and of themselves, but they'll typically do better when there's fear in the NASDAQ, S&P, and Dow, when there's weakness in those. So I'll be cautious about that because those 2 are defensives, while the other 3 belong to, the first 2 belong to the NASDAQ, and KRE belongs to the Russell. All right, let's go take a look at the Russell. What do we got? Well, same thing. I'm going to go through the process. Are we clearly above or below the previous session close? Not really. We're kind of slicing and dicing through it. But aside from that, do I have a Darvis? Nope. Wave? Nope. Am I anywhere near the red or green zones of the hourly price movement range? Also a no. So if all 3 of those are just no, I'll wait for more price action to see if some of that stuff develops. All right, let's go take a look at the Dow. I'm going to leave the Dow out. It's chopping about. It's up, it's down. Again, take a look. When I talk about time and the clock, look at those first three candles. This is 9:25. So here's 9:30. That is the candle of unusual size, COUS, right? That is where when the volume comes in, we could see massive ranges right on the bell. Then we have the candle that follows up. That's not much karma either. So you can see why we wait 5 or 10 minutes, right? This is a very regular occurrence. What I'd like to see by about 9:45 is, are we sitting above or below the previous session close with some clarity, right? By 9:45, I'd like to see if we've got proximity to one of our core setups. Yeah? Okay, cool. So then the next thing I want to do is ask myself, well, if the Dow's pretty strong, it's doing all right. Well, what moves with the Dow? And this is where knowing the weighting of the different indices is so important. Now, if you ever are curious what sectors are in each index, you can see that in the notes section of the room. In fact, that should be what's on your screen right now. I'm not 100% sure. I think I can bring people to that notes section, but this is what it looks like. Put it in the notes. This is what it looks like. All right. And when you do that, then you start to get a better idea of where, in terms of sectors and stocks, we want to look. So if the Dow's moving higher, the first thing I'm going to go look at is financials, not the industrials, right? The Dow's moving higher. Okay, financials are moving higher. Really cool. Same three questions. Hourly price movement range, Darvis, wave, none. You can see here right at the bell, we had a Darvis that had situated itself. But that's about it. Above the previous session close. Great. What's the number one weighted stock in the XLF? It's Berkshire Hathaway, which I tend not to day trade. So let's take a look at JP Morgan. And this is the process that we'll go through with the sectors looking for a setup, gang. So now you've got a really good touchstone for step 1, step 2, step 3, understanding time, understanding the weightings, and then understanding whether I want to be bullish or bearish today based on the index, not all 4 indices, right? If the Dow's up and the NASDAQ's down, which is kind of what's happening right now, I want to be specific to Dow setups to the long side, or maybe S&P, right? If the Russell's strong, I'll look for setups specific to it. Remember, day trading is a certain amount of constant filtering. And unlike swing trading, which we filter once a week, day trading is basically a constant state of what's a relative outperformer and what's not. And that's how we kick off our morning, gang. That's what we want to do in these first 20 minutes or so, that we start and get a good feel for where we need to point ourselves for the best opportunities.